back, Lucas and I, the financial weapon. We have another guest today. It's going to be very fun because we're going to be talking about behavioral finance, which doesn't get spoken about that much because most people, it's just let me maximize my return and Roth IRAs and brokerage accounts. And how do I think about this? Today's going to be a different spin. It's going to be like, hey, I know the graphs show that I'm on track, but like, how do I spend the money? Like, how do I actually feel good? And how do I really know? And like, why is it that although my advisor tells me I'm okay, or if you're your own advisor, you're like, I know the numbers work, but for some reason, I just don't have this feeling that gives me confidence. Like, why is that? Well, there's a reason for it. That's what we're going to be going through today. So thank you to those of you that are here. Thank you to those who are going to be watching this recording later. Many of you have let me know that this time isn't always optimal for you. That's why we have the recording, so you can watch it back later. It's going to be a lot of fun today. So thank you guys for being in here. In about 15, 20 minutes, I'm going to bring on our guest. If this is your first time part of the show, Lucas and I here, we get to run this and we get to moderate the chat. We get to see you guys coming in. If you have questions, you get to put those in. We get to save them and ask our guests later. It's a lot of fun. So if you are here for the first time, know that this is informal. I try to keep it really loose. I try to keep it really fun. I don't want this to be like a webinar where you're pitched a product. I don't have anything to pitch. I just want you to get value with whatever we talk about. So today is going to be about behavioral finance. Now, some of you have sent me really nice notes about, hey, these have been really helpful. Some of you say, hey, I just like it better when it's just you and Lucas. You guys hop right in and it feels like it's more direct. So because of that, I changed my mind. We're not going to have a guest today. No, we're going to have guests, but we're going to keep a blend. We're going to keep it fun. We do have some good news. Some of you have been asking. We are going to be launching a community. I don't know exactly when. The timing, I have to say, is probably early January. I don't know exactly. But this community will be a free place where you guys can communicate. So what's up, Laura? What's up, Chris? What's up, Kyle? If you guys want to talk about, hey, here's what I did in my academy. Here's how my retirement's going. Here's how I'm thinking about it. You guys are going to be able to do that. So does that sound like it's something that's going to be helpful? I've already had a few of you say I'm willing to be a moderator when we have that new community so that you guys can talk to each other. We want it to be a respectful place. So of course, we're not going to let anyone in from Florida. Just kidding. Of course. So Dean, yes, we missed you, Dean. Okay. Lucas and I were just talking about you. What's up, Tim? Guys, once again, this is all for fun. We love getting to do this. Nothing here should be ever construed as financial advice. We're here to have a blast. So Chris says, yes, that sounds great. The live chat, that makes our job more fun. So we don't need to do this. You guys don't need to respond. If you're enjoying the type of content and shows and different things we're doing, or if we ask a question, we kindly ask that you put it in the chat because this helps us engage. Oh, Michael's coming out with me some shade already. The weekly Ari Teletubby live stream. If you guys don't know, my last name is Taublieb. Now, I had a rough childhood. That could be Teletubby. That could be Tabuli. This is just the way it goes in this world. So because of this, we want to make sure that everyone gets a nickname. And I guess my nickname is Ari Teletubby. So I hope that doesn't stick. You can see Greg is here right now. Greg's like, I already spoke to this guest that you're having on. I'm looking forward to hearing about this behavioral finance thing. What's going on? What's up, Jen? What's up, Derek? So about 60 of you guys are here with us now, and thousands are going to be watching later. We want this to be fun and impactful. You think you can keep Florida man out? No, I know we can't. So my first question is, how many of you guys, excuse me, how many of you guys have heard about behavioral finance and taken some steps to research it? Have you ever heard about behavioral finance? Some of you are like, well, actually, yes, because I've thought about money. So I actually think I'm an expert in this. Others of you are like, behavioral finance, what is that? Like me thinking about money? Like, I don't even, behaviors. I mean, Lucas, have you heard of behavioral finance?
Yeah, I mean, I think it's this thing about how do you behave with money, but what does that mean? And what implications is that going to have on your retirement? And what investing downfalls could bad behavior have on your financial future?
Well said. Well said. So I will start by always showing the fun emails that I save for you guys every single week. So finance is all behavior. Janice, you're right. David goes, I don't really think I've thought about it. Well, what is that? Ryan says, nope. It's a weird one because it's like, hey, we all have behaviors, obviously. But when I get to see it as an advisor, it's exciting because I'm like telling someone, hey, you're in a great spot. You can absolutely retire. And they're like, oh, I hear you talking. I see words being said from the Teletubby voice, but I just like don't believe you. And I'm like, I kind of sense that, but like, why is that? And we want to go deeper and go, hey, so when you were like 10 years old, what was money like? Was it in your family? Was it something that was openly discussed? How does that impact things? Derek's like, I know behavioral finance. I just don't time the market. Laura's in here talking about all of her fancy conversions she did. She goes, I don't know if it was the right amount, but we did it anyway. We used the academy. We did it a little bit lower just in case it wasn't exactly perfect. Laura, that's safe. You always want to do it on the lower side. But Laura, if you've been watching the show for a while, before we talk about conversions, I prefer you spend more money or maybe retire earlier. If you've already thought through that, you're one step ahead of me. Daniel Kahneman wrote a great book on behavioral finance. There's lots of great books out there. One of my favorite books is called The Undoing Project. Lucas, have you ever heard of that book?
I have heard of it. I've not read it.
That's okay. There's many I haven't read. But The Undoing Project, the reason I mentioned this, one of my favorite books, there's a few stories before I'm going to send you emails and then bring in our guest. So I forget exactly the quote, but it was something along the lines of people pay a massive price for mild embarrassment. And they talk about a story where someone was late to a college class, and they decided not to go to class because they didn't want to be embarrassed when everyone looked at them and said, you're late. And so they decided, I would rather not learn today than be embarrassed in those 3 seconds from getting from the door to my seat. And we all make those decisions all of the time. We're just not always thinking about it in a very conscious manner. So the cool thing about planning is we want to go into investments and taxes and a lot more different strategies. But if we can think about behavioral finance and go, oh, I'm aware of it. If this person said, look, I get really embarrassed. I don't want to go because everyone's going to look at me and I'm just going to feel conscious. I'm going to sweat and I'm going to have to change shirts. And if you're me, you might have to change 2 shirts because I sweat a lot. Well, at least I'm aware of it. I can bring multiple shirts. I can go to the back. I can think, oh, I'm going to go earlier. Like there's things you can think about versus if we're just not aware of these biases at all, well, all of a sudden you just might not learn and it's like you're cheating yourself. So we don't want to do that. Derek, appreciate these comments. Your podcast has changed my mind on spending more early in retirement. Derek, can you expand more on that? Because some people, they go spend more early in retirement. Are you saying I'm really excited to spend more early when I have my energy and my health and before I was not going to and now I'm going to? Or are you saying, no, I now I'm getting more clarity that maybe I should be spending more money because I have the financial means to do so? Okay. No clue about behavioral finance. Got it. Lots of different things coming in. Lucas is going to be saving the best comments that we see today. We're going to bring on our guest in just a few moments. He's here waiting, so he's going to get to come in just a second. Here are the best emails that I have received so far. So over the course of a week, I get to save what looks like something that might be entertaining, and I get to try to show it to you guys, and I hope it entertains you. So let's get at the first one here. This was just a very kind note. Okay, Derek says the first. So, okay. What Derek is referencing here, I'm just going to explain this real quick and then we're going to hop in. So, your podcast has changed my mind on spending more early in retirement. So, some of you make the following mistake, not because you're a bad person, because you just don't know in the same way I couldn't know what all of you guys do. So, here's this example. Many of you go, look, I want to retire early when I have my energy and my health. And I'm really excited because I want to start doing traveling and all these fun things that I've been putting off for a long time because I've been working. But I don't have Social Security yet. I don't have other income sources. I don't want to spend too much too early and run out of money. That's some of you. At the same time, you're like, hey, but isn't this like when I should be spending money because I have my energy, because I have my health? And what people do is they tend to underspend, be 80 with $10 million going, why didn't I spend more or retire earlier if I was in a fine spot to do so? So the strategy I talk about are not saying go spend for the sake of it, but making sure you're spending sustainably. So let's start bringing up some emails here. Here is the first one. Okay, so real emails, I'm just blocking out for security purposes. This was an email that got sent out last week where I was introducing Katie, who is our guest. And this was just a nice note because they said, Ari, I hope you and your family are doing all right. I know there's a fire nearby. I used to have a home in Yorba Linda that sometimes had views of the foothills on fire. It's scary. My family is okay, so thank you. If all of you are unaware that my family is okay, that's equally fine because how could you know where I live? But I live right by UCLA. I am totally safe. My parents live in Malibu. They're specifically in Point Doom. And so there's something called the Franklin Fire going around, which is right at Pepperdine, which is where James, my partner, went to school and grad school as well. So because of that, we want to make sure everyone is safe. We're doing what we can. The show must go on, which is why we're here today, but all is good. So no worries there, but lots of you guys sent me very kind notes about that, and I appreciate it. This is what I think you guys are going to find interesting. So I'm going to pull this up today. This was a comment. I'm not going to say who left this, but I am going to show it to you guys. So I sent out an email reminder. If you are not on the email list, by the way, and you want to be for whatever reason, you don't have to drop your email publicly here, but you can email me. I'm going to put it in the chat right now, and you can get added to the email list. Most of you are already on it, but if you're not, let me know. So they say here, I blocked off the email. I think tonight's live will be interesting. For me, as I get closer to retiring in a couple of months, I'm starting to think about switching from saving to spending what I've saved. And although I've known for a few years that I've done well enough and shouldn't have a problem financing a long and active retirement, I have to admit that getting ready to flip that switch, it's a little scary. I guess that's the emotional side of money. How many of you guys feel like that right now? Let me know in the chat. Why for that's me, and give a little bit of insight if you don't mind. So for example, yes, that's me. I don't know why, but it's hard for me to spend money. If you're like, no, I have no problem, just financially, I need to make sure I'm good to go and I'm retiring, just give us some insight there. So we're going to watch the chat for your responses there. And as you do that, the final email I have for you guys, this is just fun for me. So thank you. Someone put, really enjoy your podcast. Hey, Ari, at some point we will visit. I don't know what he's referencing in terms of visiting. Like, I don't know if he's coming to my house or what he means here, but at some point he will visit as I'm excited about your and James's approach to the holistic planning process and ongoing education. Part of my interest is not just your financial work, but we are kindred spirits. My son also played soccer. He played his club ball with the Dallas Texans, went to England, played for an academy, and got his degree. He then went to Germany to play professionally. At England, he played against several teams at Manchester United, Manchester City, got lots of good experience playing at a high level. I just wanted to share this and how much I enjoy the work. I'm not in a position to change advisor right now as I'm a public service employee and my advisor has to be registered with the state of Texas. I actually let him know that we are SEC registered. And because of that, he actually might be able to work with us. But he said, however, once I'm done, I will reach out to visit. I've enrolled in the academy and continue to use it to oversee my investments. If you're unfamiliar with the academy, Lucas will put it in the chat right now so you can see what we're referencing. How many of you here right now, is this your first time here? I feel like most of you are returners. I'm going to go through some of the comments right now, and then we're going to bring on our guest. If this is your first time here, just type in first, just so we know. If you are a returner, just put R, because we want to gauge how many of you guys are here for the first time versus returning. So Greg here, who just spoke to our guest, says, I'm the same. I need a lot of data to feel confident on when to retire. Laura, we're looking forward to this topic today. I can't seem to switch from my saving to spending mentality. Brian, giving notice in 2 weeks and feeling anxious. Well prepared, but can't stop running scenarios to be sure. Brian, that's why. I have a really easy answer for you, by the way, for this one, Brian. You're a human. This is not going to stop. And part of that example I gave at the beginning of the person not wanting to go into the classroom because they want to be embarrassed is they're like, why do I feel this way? They're a human. Maybe early on in their life, something happened and they were embarrassed. And so they're always embarrassed when there's a public environment. So Brian, for you, I believe you're going to be anxious. What if scenarios will help decrease your anxiety? But there's a deeper way of thinking about this that should help, which we'll talk about today. Derek, I feel the shift from saving to spending will be tough for me when I retire. I believe that's most of you. And then others are like, it's too easy for me to just work longer, just in case. Yeah, just in case, 1 more year, 1 more month, 6 more months. Guys, we could do that forever, especially for you engineer types. I need an overwhelming amount of confirming data to have confidence. So I'm going to stop here and bring in our guest in just a second. Here's the last comment. So I find that engineers have a very difficult time because you want to have a high degree of confidence, which actually is dangerous. And the reason it's dangerous is you'll go, well, what if I get like 2% returns over time? Well, your plan's not going to look good with 2% returns. And so you're just going to keep working. And so there becomes a point where you have to go, are these assumptions reasonable? What am I missing here? How do I think about this properly? So with that being said, I'm going to shut the heck up and I'm going to bring on our guest. So you can see right now, Jeff, you are live with us. Thank you so much for being here. Jeff, I know you have all these super fancy designations, which everyone's going to get to hear right now. And you're a humble guy, so most people don't like getting to hear this. But not only are you a certified financial planner, you have your behavioral financial advisor designation and the accredited behavioral financial professional. So you are the person for this. Jeff Dial says behavioral financial therapist. That is awesome. So guys, if you have questions for Jeff right now, put it into the chat. I'm not going to promise we're going to get to everyone, but we're going to do our best. Jeff, I'm going to make you the big man on the screen here so everyone can see you nice and big. Jeff, what does it mean to be a behavioral financial advisor?
Yeah, great question. So, really behavioral finance is just a study of how we think about money, right? And it's kind of a subset. Someone mentioned behavioral economics earlier, and that's kind of comparing how people act in the real world with financial decisions based on what an economist would say, right? Kind of standard school of thought. And this is kind of taking that a little bit further, and it's just saying, what is the psychological influences? What biases do we have as people that affect how we invest, how we work as advisors with people and their money? And it attempts to explain high level, kind of irrational market movements that are the norm from traditional schools of thought, right? And we've talked in the past, or maybe you've talked about in the past, efficient market hypotheses, right? And this is just saying every stock that's out there, right? It should be fairly priced based off of all the public information, right? All of their balance sheets and their news and the headlines and their revenue and their earnings. All of that should be priced in the price of a stock, and that should be a fair price of that stock. But there's times when we see things act completely irrational, right? And you could go back to the dot-com bubble. You could have bought any website, any stock that went public and made a bunch of money until the bubble burst and you didn't. And during that time, when everything's shooting up, the efficient market hypothesis doesn't work. You can't look at any of the numbers. You can't look at revenue. You can't look at companies that are losing money, but their stock's trading at these high levels because it's not acting rationally. It's just a whole bunch of people buying stuff and driving the market up based off their biases. And we'll talk about some of those specific biases in a second. But that's what behavioral finance is.
Love
Just
it.
kind of
Now,
looking at
why?
how are we hardwired to make bad decisions.
Yeah, love it. So why personally, like you could have chose to study anything. You're a smart guy. I'll let you kind of give your background a little bit coming from these big fancy companies where you have these big roles. You don't traditionally see someone as intelligent as you also going, I recognize it's more than numbers, it's behavioral finance. So what got you actually interested in it?
Yeah, it's a great question. And my background, I was, I've been in the industry 12 years. I'm new to Root in the past month or so, but I've been in the industry 12 years. And at first, I think a lot of us are driven to this industry because we're logical people, right? We could read rules, we could read laws, we could read tax code, we could read the CFP books, we could use our software where it's numbers and math, and there's a lot of engineers in the chat, and we could try to answer everything from a logical, mathematical standpoint. And that's how my brain works. I'm very logical. Drives my wife insane. Like I just like, how would we possibly think this when like this is the logical answer to the solution? And I presented so many, here's why we should do this and not that with your money. And then, the estate plan or whatever it is around their finances. And then you look and you talk to the client a month or two later and they did the opposite or they didn't do anything. Right. And you're saying, I don't understand how I could have given them that logical of an explanation to do something and they're not doing it. So I realized there's a disconnect, and why are we not getting action that's going to make impact in clients' lives from my conversation? And it's the emotions, right? And so a lot of that comes into the behavioral finance side. So it's 2019, a colleague of mine and really good friend to this day at my last firm, we're having those conversations, and we started looking online if there were things beyond just diving deeper into the technical knowledge, right? Because a lot of us just lean into, well, if I learn more rules, if I learn more laws, if I learn more about the planning, I'll be able to help more people. And I found that if I could just get better at the conversations, I can have better, meaningful impact in clients' lives. And so I started looking at these two different designations. The first one I got was the BFA, as a behavioral financial advisor, which helps you identify a lot of what those biases are and how we're hardwired to make those decisions, and then gives you some tools to help have those conversations as well. And then I was also able to pursue a second one called the Accredited Behavioral Financial Professional. That one's a mouthful, and kind of go into that. But really, it was just out of necessity of saying, if I'm not driving results by doing logic and doing math and doing the things that my brain thinks about, there's got to be something else that's getting in the way of us making good decisions.
Guys, how interesting is this? I mean, I have a million questions, and I'm sure, Lucas, I want you to be able to ask some questions here too. I'm thinking of a few situations with clients where I was like, I got out of the meeting, I was like, well, I mean, did I crush that or did I crush that? And then a month later, nothing happened. I'm like, hey, you said you were going to spend money and like you're not. And you can see Mike is like, my wife needs this guy. So with that being said, I have a few more questions for you. I want to hear some of your favorite stories, how you help people do this. But if you guys hear this today and go, I need this guy or my wife needs this guy, Jeff is working here at Root. He is accepting new clients. You can learn all about him, watch his video in more detail. We put the link in, so if you guys want, you can go ahead and learn about him after the show. Now, also know when you book a call with us here at Root, there's a button that says, see if you're a fit. When you go through that and book a call, you can put in the calendar note, hey, I really resonate with Jeff because of XYZ. His beard looks so good, yada, yada. We get to match you with the best advisor that we think is a good fit. And we want to know if there's someone you care about deeply. So with that being said, you can see the theme that's coming today, Jeff, which is, look, I have the money. It seems like I really know what I'm doing, but I don't know. There's this feeling here. How do you help people who have a question like Brad here, who says, look, I'm a saver. I love having money. I like watching it grow. I'm just worried when I retire, it's going to be difficult to spend. Like, what suggestions do you have?
A handful, and that's such a common. It's common in the chat here. It's common with every client I've talked to. I was shocked the first couple of years in this industry, as I'm sure you were, Ari. Hey, you're getting ready to retire next year. How excited are you? I'm not. I'm terrified. Right? And you're just like, oh no, this isn't going well. And so that's kind of those limitations, and a lot of it comes from I've been accumulating, I've been tucking money away, and now you're telling me I got to take money out, and that's kind of scary, right? So it's very, very common, and I like to talk in silly metaphors because I think it helps kind of identify some of the errors of our ways. I'm going to talk about my grandma. I don't know what it was some kind of Plymouth, whatever she was driving in the 90s up until she was no longer kind of old enough to drive. And every time I got in her car, I would just look down at her floor mats. And this was when you had carpeted floor mats in your car. And she didn't want to ruin them. So she took like remnant carpet that like should be in a living room and covered her floor mats. And so for the 10 years she had this car, she's got these ugly pieces of carpet in there. Grandma, why do you have this? Well, that way, whenever I go to sell the car, the carpeted tan floor mats are in good condition. So her whole time owning this car, she's got to look at these ugly floor mats so someone else can enjoy clean floor mats, right? And we do that with our money, right? We save and we save and we save and we save. And we put ugly carpet on our floor mats so someone else gets to inherit it and have a nice car. And to me, that doesn't make a whole ton of sense, right? But that's how a lot of people think about their money. There's not there's not a pill. There's not something I can do to kind of snap you out of that. It's conversations, right? And it's conversations with an advisor, and it's having a plan. So we got to satisfy the engineer brain set of we got to do the math. We got to talk through everything. We got to hit the logical side of it. I'm going to be right there with you because that's important. But you may need to hear it 5 or 6 times. You may need to be reminded of it. We may need to keep revisiting it. We may need to show it to you a handful of times. And sometimes it's just how we phrase it, how we revisit the conversation gets to there. There's not a one-stop solution for everybody. And I think of a client that I had in my last firm that I've been working with for a number of years. I really knew this client and his wife very, very well. And he was the most even-keeled guy. I didn't stress about anything. And he owned a car wash, right? And that was his whole career. He put everything he had in his car wash, and it was getting time to retire. He sold it. He sold it for like $1 million. And now he had all this money, and all of a sudden he's a different person. He was stressed about everything. We were talking about how do we take this money from the sale of the proceeds, put it into an account and start generating income, get some growth out of it over time. And, talking to him 45 minutes, an hour, a couple times a week for like a month. And one time I just, said, what do you think we ought to do? And he just got so stressed. He threw the phone on the ground. and just walked away, literally. And his wife picked up and said, "Hey, you know what? He's just stressed. You know, I'll have him call you tomorrow." And we talked, and they said, "You know, sir, what's going on? Why the stress, right?" And he just said, "Well, now I have this asset, and now it's going to be subject to risk because it's going to be in the market. Whereas before, it gave me income every month. That was my income source." And I challenged him and said, "Well, I would argue that when you own the business, you had risk, right? It could have been on fire. Someone could have slipped and fallen on ice and sued you. You know, all of those things happened, and the value of it was fluctuating. You could have sold that car wash in 2008 as much as you could have probably the year prior before the market collapsed. So there was volatility to it. There was fluctuations in the value of it, but you didn't care because you were taking your income off of it. We have to think about it the same way now. It's going to be subject to risk if we use volatility as our definition of risk, which I don't like to. We can talk about that if you want. But it's going to be subject to those ups and downs, but it's still going to provide you what you need to get out of it. And just, I think that changed it to them. So whatever it is, we got to figure out what metaphor or what quote or whatever gets you there to help you understand that it's going to be okay.
Love
Otherwise,
it.
you just end up selling a car with perfect car maps.
I love that analogy, and I'm going to be stealing that one. For some people, you need to hear it for one way and it just clicks. The big thing is, let's assume you had an advisor that was not aware of anything Jeff just said and said, "Jeff, I get you're excited about this and that's a cool story, but I just think we need to go back to the math." Well, that advisor might be someone you just, for the rest of your life, truly, you would see, "I'm okay, but what if markets do this? What if markets do that? I don't know why I have this feeling where I'm not confident." You need an advisor that's aware of these different things and going, "I know how I would explain it to you differently." I use this story of when I went and had to get a hip surgery. Look, it was really weird. I'm young to have to get hip surgery at the age I had to get it. It just felt wrong. Now, the reality is I play soccer so much that it was the correct answer. The logic was I needed it, but it felt wrong. So I was just, no matter what the doctor was telling me, I really wasn't hearing it until I found a doctor that positioned it to me. And I go, "You know what? You're right." They were all right, but he said it differently. And so because of that, there's not a magic pill that some of you are going to email me after and go, "Oh, what's the one book that'll click?" It might be one book. It might be 30 books. You might be able to read 30 books and still not have the confidence because you might just not get it from that advisor. I know a lot of you on the line with us right now, you like this stuff. You're tuning in to a financial show right now. For some of you midday on the West Coast, others of you after dinner, after work, you could be doing a lot of different things and you're choosing to be here. So I imagine you like this stuff. Maybe your spouse doesn't like it near as much. So you're like, "Look, why is my spouse, who doesn't understand this to the degree I understand it, why are they less stressed than me?" Like, we'll see that as well. So lots of different things going on here. And I like the way LSU Tiger says it here. For our working lives, we've known how to earn money. We know how to go to work. Retiring, well, that's a whole new way to work. And it's not something most people have experience with or peers going through it. How could you be good at it? This is like expecting me to throw a fastball when I play soccer. So don't have your expectations off. Lots of different questions coming in, and we want to touch on a lot of these, not every one. But Lucas, what are some of the best questions that you see coming in that you want to ask Jeff?
Yeah, we've got a great question for Jeff, the behavioral finance expert. What are some of your favorite books so our audience can educate themselves about behavioral finance on their own time?
Yeah, throughout the course of studies, I've had a couple. Some of them are pretty dry, like this giant textbook that I've not read all of, so don't take me to that one. Don't read this one; it's probably a little too college for you. I got married a year ago, and so even this is always trying to learn this. I've got 2 recent books I'm paging through of personal finance for couples, how to talk to your wife about this stuff. Because even though I do this for a living, it's just a different dynamics, right? Here's the dork that I am. There's a bunch of books right here. Let's see here. This one's probably one of the best. I know James has referenced this one in the past. It's The Geometry of Wealth. This is just kind of how your upbringing, how your personal experiences with money, if you're born in the Great Depression versus someone born different times, all of that ties into it. So this one's pretty good. The Geometry of Wealth, Brian Portnoy. So yes, I've read it. There's somewhere in here, I've got a bunch of highlighted sections of it. So those are a couple of the good ones. And it's one of those things where you can read those books and they might help you understand some of these biases we have, doesn't mean it helps you overcome them, right? Uh, think of another analogy. If you're a nutritionist, you're a dietitian, and you have someone coming in and say, "Hey, I want to lose 20 pounds." They can go online and read to cut the sugar, cut out the cookies, work out a little bit more, and you might help them develop a recipe in this roadmap. Say, "Hey, eat this stuff, work out like this, come see me in a month." And they know what to do. And in a month, "Hey, how'd it go? Let me track your food log." And there's like cake every other day. What's happening with the cake? We talk about cutting out sugar. And it's like, yeah, I know I'm supposed to. I read the books and I know all of this stuff. But, the one day it was someone's birthday party at work. And the other day I was sad. So I ate because I was a little sad. The other day I was really happy. I got a raise. So I'd have a cake to celebrate. Right. And so reading the books and knowing it is different than being able to do it. And I think that's really where working with someone, whether it's sitting down as your spouse or working with an advisor and kind of having someone keep you in check is really where it comes down.
Love it. Lucas, any other good questions coming through?
Just a comment for any listeners we have that are familiar with Warren Buffett, Benjamin Graham. Just when you, Jeff, you're talking about the analogy of the car wash. I mean, if you guys have read The Intelligent Investor by Benjamin Graham, he used the analogy of Mr. Market. When Mr. Market comes to you every day and says, "I'll give you X amount of money, for your portfolio. I'll give you $100,000. And then you're like, "Oh no, I think it's worth more than that." And the next day he comes back and he's like, "I'll give you $94,000. And every day Mr. Market comes and he'll offer you something for what you've got, but it doesn't mean you have to sell it. It's the exact same analogy. When we're looking at owning stocks or owning real estate, like we have talked about multiple times in this show, well, real estate fluctuates in value all the time, just like the stock market does. It's just not something you can go out and sell with the click of a button. And so everything's fluctuating, and you have to detach yourself from that by being a logical behavior financialist, right? And be able to separate, hey, everything's going up and down in value, and that shouldn't affect how I think about it because that would be irrational. So just a thought.
Beautifully said. How many of you guys know the candy bar example that James likes to tell? Let us know in the chat if you know that example. If you don't know that example, you need to. And the reason you need to is he talks about a few different things. The first thing he'll talk about is people will think that you need to be a great spender the first day that you retire. And it's not a light switch that now you're an amazing spender. It's a dimmer, and you need to slowly learn how to do this. It's a new skill. The candy bar example is James, who is basically saying, and you can see Chris is like, "Yep, I know it." It's basically saying, look, you don't have it in you to probably buy a $10 candy bar in a hotel mini bar. It's just, that's not who you are. That's not why you have what you have. But if you were to buy that candy bar and get 30 minutes more with your spouse, how much is that worth? And for some of you, you're like, "I see my wife plenty." Others of you are like, "No, there's no limit to that. And that's what I want to spend my time doing." Now, this is just, once again, we want to try to come up with stories that resonate. We don't only do the behavioral side. The reason that we have the academy and that people work with a firm like Root is to have access to tools like this so you can run what if scenarios. We just don't want you to only do this. And some of you will say, "Yeah, I think I can retire, but what if markets drop by 60% the day I retire? What if Social Security gets reduced by 60%? What if inflation is 1% higher than I think and returns are 2% lower than I'm projecting? And I live until I'm 110. And you get the point here. There becomes a point where it's so unrealistic that, look, no plan is going to look good. And the risk is that I die if I go outside and get hit by a car. So how do we live in a way that doesn't cause you to have anxiety? And the last example, before we go to more questions for Jeff, is I had a client that had a lot of Microsoft, more than they know they should have. And using Jeff's example, they're like, "I know I should diversify, but I just don't really want to. It's done so well for me." They have an emotional attachment to Microsoft stock. And the risk here is that Microsoft doesn't do well and they can't live the retirement that they want to live. But the bigger risk is this is someone who's going to spend their whole retirement checking their phone on the stocks app. And every day, if Microsoft goes up, they're going to have a good day. And if it goes down, they're going to have a bad day. That's not really a fun retirement where you're stressed worrying about something out of your control. So Jeff, any comments coming in? Any stories that you want to resonate? Anything else so far that you want to address?
Sure. Yeah, I mean, I'll kind of talk about something you just mentioned that's part of behavioral finance. There's a study that they prove that the frequency in which you check your accounts is what you trick your brain into thinking your time horizon is. So clients that ignore their accounts, check it once a year, once a quarter, they're not checking it that often, they can zoom out and think, oh, investments are for the long term. The volatility of the day to day does not bother them. If you're checking it daily, sometimes multiple times during a day, and this is real, then your brain starts thinking that every little bit of change matters significantly more. So a down day, pretty bad, right? Psychologically for us, even though mathematically it's nothing, it's a blip. And we've got loss aversion. It's one of the biases that I kind of hinted at earlier. If I give you $100, or if you earned $100 versus if you lost $100, the loss hurts a lot worse than the joy that we get from the gain, right? So if you're training yourself to look at your Microsoft 4 times a day, or Russ is checking it hourly, if it's up 1 hour and it's down the next hour, that down hour is going to weigh on him a lot more. Let's not do that. So
Yeah.
to comment on that, Lucas showed me a question about how do you change from saving to spending? Again, that's the popular one. That's the hardest question to answer. It's dependent on each person, right? That's some of those stories we talked about, my grandma's floor mats and the business and the car wash. But again, it goes back to you have to develop a plan. The math has to matter. We have to look at the plan. We have to talk through it. You got to keep monitoring it. Check your savings, check your spending. I mean, regulate what you're actually doing, and then just keep talking to us. You're not going to be okay with it overnight. It's not going to happen in one conversation. It's going to happen over time. And seeing, maybe your portfolio through some market downturns and seeing that you're okay if you don't sell and just living through it is going to be some of that proof. But there's not a catch-all. But if you're not working with an advisor and you're having a hard time switching from saving to spending, then you need to be working with somebody.
Exactly.
Because that is that block.
Some of you guys, by the way, are like, look, I think I can manage my money on my own. And I would say, I agree. I bet you can. I can do surgery. Doesn't mean I should. So it's how can you allow yourself to go, hey, I kind of recognize I need this. Like, I think to your point, Jeff, most people know how to eat healthy. Why do nutritionists exist? Why do personal trainers exist? I'm not saying rocket science on my YouTube videos. I'm trying to think of ways so that you guys go, that worked, even if I look as dopey as what I'm going to show you right now. And this, by the way, some of you saw this LinkedIn post earlier this week, but this is the tallest I've ever looked right here. You can see it on the screen here. This is my dopey cauliflower idea, which is how do we think about tax strategy? Well, most people don't want to just start dreaming about Social Security and tax strategy and optimization. So we have to come up with different creative ways to illustrate this. I'll show this to a client. I'll see them laugh and I'll go, look, that's the first time you've laughed in the last 3 weeks we've met. Why is that? Because you tell me that you have $5 million and you're not worried, but like there still seems to be something. So because of that, Jeff, I know there's one concept you want to make sure that we get to next, which I think is powerful. So I'm going to let you run with this. And I know your time is valuable, so we won't keep you longer than you need to be. But if you can address this last, and then for everyone else, once again, if you want to work with Jeff, you recognize, yep, this is someone that I think I enjoy speaking to. I think my wife would enjoy speaking to. This just feels different. You can email or book a call. Just make sure in that calendar note that you mention Jeff. Jeff, what would you like to leave us with?
Yeah, I'm actually going to comment on something LSU Tiger's saying. And if there's something else you want me to hit on, please let me know, Ari. But the comment here that he just said, I didn't mind losing money in the market when I knew I had years or decades to recover. Now I'm retiring earlier and I can't recover, right? I hear that all the time, constantly, whether you retire earlier, if you retire at 65 or you retire 70. But you got to think of when do you need your money, right? And for us, we talk about the root reserves. We talk about having 5 years worth of needs off the portfolio and safer assets and bond assets. That's to help mitigate the short-term needs and to prevent you from being at risk in those short-term downturns. But what are we retiring for, right? If we're retiring at 60 and we build out a financial plan out till 90 minus 60 is 30 years. You cannot point to a time going back in history where 30 years later the market was lower than it was when it started. So the day you retire is not your time horizon. That is a checkpoint. It is not the finish line. And we've got to think about that as different than our time horizon for investments. Those first couple of years in retirement, we have reserves for that. Beyond that, we need growth. We talked earlier about the definition of risk. I don't count that as volatility. I count it as a couple different things. Either A, selling a volatile risk or asset at the wrong time, We prevent that by having the reserves. We prevent that by having the safety net to get us through market volatility. The other big risk is living longer than your money can last. How do we prevent that? We have to be in the market, which means we have to accept the ups and downs. But think of what your time horizons are. Even if you retire early, your time horizon is not next year. Your time horizon is 20 years from now, 30 years from now. So kind of train your brain to think that. That might help you be more comfortable spending. It might help you be more comfortable with the volatility in the market.
Love it. Love it. I mean, you've done more than we need, Jeff. This was epic. And I can tell you so many people are already getting so much value from this. And this is what I think most people don't speak about enough because they want to go right to, okay, what's the price to earnings ratio? And that's easier to talk about. We're going to ask you to do harder things like this.
Yeah. I mean, go back to kind of the evolution. This is a newer science, a newer study, because it's had to evolve, right? If we think of what our jobs would have been if we had this job 40 years ago, we're not even talking about financial planning 40 years ago. The availability of resources and access and the internet and all that stuff doesn't exist. Our job would have been doing a lot of research on what stocks to pick. And then that got commoditized. The internet and index funds and all of these things and readily available information, that doesn't matter, right? So then people said, okay, well, if we're not helping people pick stocks, we got to help them figure out taxes and retirement planning and financial planning. And that's been the rage the last 10, 15 years. Well, now some of that's starting to become commoditized. There's online tools, there's different things you can go to, there's YouTube channels. The last frontier really is how do we now talk through the math and talk through all of that from the emotional side to make sure we're not just using the information that's out there, but how do we actually use it to make good decisions?
Yeah.
Because the last thing is our brain's going to be getting in the way between what's the right thing to do, which is on the internet and free and available, and then us actually clicking the button to get it done.
I still never know if it's analysis paralysis or paralysis analysis, but that's a big risk. And I talk about it in my videos where I go, look, I'm glad you're watching these videos, but some of you are like, I've watched every video and I feel very confident. And others of you are like, look, I watched a lot of videos, but I keep watching them and they make sense, but it's just still not kind of fixing my problem. It's like, hey, we don't need to set up 100 appointments with the doctor. Maybe we just need the right one. So Jeff, thank you so much for being here. This was awesome. Guys, how helpful was this? Is Jeff not the coolest? I mean, this is why we're lucky. We get to hire awesome people like Jeff who get to work with you. And Jeff is going, look, just let me be an advisor. So Jeff, we're really fortunate to have you here at Root. Welcome, of course, since you are, of course, new here. This is fun. Guys, if you want to work with Jeff, once again, go to and book a call. You can go learn about him. You can email me. I love that. The day you retire is a checkpoint, not your time horizon. So awesome quote there. That's going up on the wall behind you, Jeff. So anything else, Jeff, you want to leave us with today?
Just appreciate it. Yeah. Hopefully I'll talk to some of you guys moving forward, and I appreciate you having me on.
Sounds good, Jeff. Have a good one.
All right.
Awesome, guys. So Chip is going, love this talk. Great information. Thanks, Jeff. Thanks, Jeff. Thanks, Jeff. So I get to share all of this with Jeff right after this. So guys, thank you for the comments here. I want to keep doing stuff like this because I think you get a different perspective. You could tell me if I'm wrong. You guys seem to be resonating with it. This is live, of course. I could choose to do a webinar and I go, here's 20 questions, Jeff. Okay, let's go line by line. I just don't think that's as fun and I don't think it's as effective. And I'd rather do this where in real time we can see your questions and go, hey, that one resonates. I think it's going to go with a lot of different people. And you brought this up. And so we didn't get to every topic. There's a few I want to make sure that I get to here. But guys, it looks like the majority of you said, mahalo, Dr. Jeff, amazing therapy session. Great stuff, Jeff. Thanks you. 3-year reserves. If you're conservative, you could do 5, let the rest ride, especially if you have decent Social Security or pension. You guys are exactly right. So lots of awesome comments coming in here. I got my mind on my money and my money on my mind. Thanks, Jeff. So good comments coming through. Okay. So I want to talk about this point here from you, Laura. And Laura, you are awesome. And I see you on many of the shows here. I'm the first generation to have investments to live off of. It just feels weird. My parents and grandparents didn't have much and weren't spenders, and I haven't been either. If you were a spender, I'm not saying you wouldn't get invited to Thanksgiving, but they might be like, Laura, are you really a Roberts? And so it's not something for you to beat yourself up on or give anxiety. It's one of those things where there's guilt. Like, when you do, I mean, I wasn't in this position often, but imagine you're at school and you get an A on your test and everyone else got, a C. You kind of feel like a weird guilt where you're like, why is it like I kind of feel bad? Because I did well, so I shouldn't feel bad and their score shouldn't matter, but I kind of feel bad. So Laura, you're like, look, I kind of feel bad. I don't want to put words in your mouth, but you're like, my parents and grandparents didn't have this, and now I have this, some imposter syndrome. Laura, tell me if you ever had that. Like growing up, just having money, that's kind of like wasn't a Roberts thing. So now it's weird. And so how do I think about that? Well, you shouldn't have to feel like there's this normal, because normal doesn't exist. I'm weird. We're all weird. This concept of living off of investments, this idea of retirement, it's actually a really weird idea. There's an article I'm going to ask you guys to go read. I'm going to see if I can find it. I'm going to pull it up. Let's see the easiest way that I can pull it up. So this, I think, will help a lot of you. It was not referenced today, but this was actually given to me by a client here. I'm going to pull it up because I think it's a great time to bring it up. I don't know exactly where did I. Okay, here it is. So you guys can see, I'm going to share my screen. When you're on my channel here, this is going to be the second video. In some of the videos, so 3 secrets for a fun retirement. If you click on this video here, it'll start playing. So I'm going to pause that. In the description, so if you scroll down, I mentioned this article here. If I click on that, it says how to have a happy retirement, 4 secrets from research. And in here, I don't know exactly when, but I'm going to put this link in right here. So if you're all in the chat, you can check this out at the same time. And LSU Tiger is saying, oh my gosh, imposter syndrome. That's me. But they go on and they talk about how a retirement is a new concept, where this concept that you'd have income for the rest of your life and you don't really have to work. And how does that even work? Well, and here's where they discuss it right here. A little history. The whole concept of retirement, this is a modern invention, like dogs in Halloween costumes, which, by the way, I love that analogy there. For most of human history, the concept of retiring was about as plausible as time travel. You didn't retire from anything. You just worked until you died or were incapacitated by a tragic scythe-related accident while harvesting wheat for your feudal lord. Now, I wouldn't probably say it like that, but, they need to get some clicks. So back then, there was no concept of companies or careers like today. You had these types of jobs. And so because of this is just weird. So there's something in us where I don't know if you're ever going to always or ever, not always. Those are 2 contradicting statements. I don't know if you're ever going to have perfect, I'm going to be 100% okay no matter what, because you can never guarantee that if you get in the car. But if you knew there was a 99.99% chance that you're going to be okay, and if you need to, you can swerve the car because you have a driving wheel that allows you to get out of the way. To me, that's more of retirement, which is you're driving. Imagine you weren't allowed to stop at a red light, or you had to go no matter what, like stop sign or not, you just have to go. That'd be really scary. And that would create a lot of anxiety. But you guys are driving. You guys, all of you on the line right now, you could spend less money. Not saying you would enjoy the retirement to the fullest, but you could. You could all work longer. It's up to you to create the retirement. We are all on this call trying to optimize and go, can I get one more year back of my life if I were to live this way? Maybe, but I don't want my kid to have to get a scholarship. And if he doesn't, he's going to have loans. Okay. Well, that's really easy. Just work longer. But most of you go, oh, it's the kid's scholarship today. But what if she wants to? This is a bad joke, so you guys can make fun of me later. But there's a meme going around saying, I need to retire, but I can't until my partner actually retires and I have enough money to fund a $20,000 a month coffee shop that loses money. So it's a really bad meme out there, but it's basically saying, and Laura will get to this in a little bit, it's basically saying, how do you live a life that actually resonates with you without you cheating yourself? Which is a lot of you are going to cheat yourself by just going, well, today I want to make sure if my kid gets a scholarship, maybe they don't get a scholarship. And so I want to make sure I have enough money to fund it so they don't have loans. That's today. Next year, it's, well, look, my wife's always wanted an Audi. I've never bought it for her. So because of that, I'm going to wait and then I'm going to get to that Audi and I'm going to retire. And then it turns out you want a lake home. And so now you're 72 and you've been working 10 more years, more than you need to. I don't want you to make that mistake unless some of you go, I like what I do. There's people on the line like me that love what we get to do. So you go, yep, we're still driving, but retirement feels like trying to learn how to drive a helicopter by watching YouTube. Love that. LSU Tiger, I don't know what you did the last 30, 40 years, but imagine if I tried to become a doctor today. Like it would be really tough the first 5, 10 years. Then eventually I'd get confident, kill a few people along the way. No, hopefully don't do that. But, I don't want you to have to go through anything like that. Laura, definitely imposter syndrome. My siblings are still working and wonder how I'm making it, but I'm still afraid to spend and run out of money. I don't have millions like most others here do. Laura, first of all, you don't know how much money everyone here has. And some people will say they have millions and they don't. And others truly do have $5, $10 million. Laura, they might want to spend $200,000 a month. You have no idea. There are some characters on the line here. Okay. That's me being nice to all of you. Some of my clients here are characters and they allow me to call them that. Hoy says, look, I learned all of this through planning. Retirement's personal. I can't keep looking at the grass on my neighbor's house unless it looks really good. No, don't look at it, even if it looks really good. You got that, Hoy? No looking. Rich joining us late. What's up, Rich? You can always go to the beginning of this, by the way, if you want to start from the beginning so you're not confused. Lucas, any thoughts, analogies, things coming to your mind when you're hearing all this?
Yeah, I'm kind of thinking about myself, and when I was first starting my business and getting out of high school and everything, and I was like, I want to do all these different things, but I don't have the money for it. I need to work to save it up, and then I'm too busy, and then I'm paying so much in taxes. I really need to. So there's always going to be a reason, regardless of your situation, to not spend or to not optimize your life and not do the things you want to do. And so with clients, I see it every single day, right? Whether they have $1 million or $25 million, it's you worked your entire life and started this career. You went to school, you worked hard, you worked extra hours to get promotions to make a great income. Why, right? There was an end goal, right? To be able to live the life you want to live, to be able to retire, to be able to spend time with your family, all these different things. So don't fumble on the goal line and then say, once you finally get there and then go, oh, well, now I'm not going to, right? Because I need to do Roth conversions or I don't know when to take Social Security. So I'm just going to do nothing and not go and live. And it's like, well, you worked all that time and then you fumbled on the goal line, the ball went out of bounds, and you don't want the game to be over before you get an end zone.
Well said. I have something I'm going to tell you all that's going to make you feel better. I've debated in the last few minutes if I want to bring this up, but I'm going to do it. So I forget, I don't know who said it, but someone said, look, I'm happier when I'm angry. Okay. So some of you are like, look, I'm happier when I'm stressed. Not like I want to be stressing about, am I going to be okay? But some of you are like, look, I like the idea of just like watching my money because I feel like I have control, even if it's fake control, even if I know I cannot control the investment. I like logging in because I feel like for some dumb reason, I have some idea of control. I'm not going to sell it, but the fact that I could, that control, that idea of control, I find that's the issue with the retirement. That's the real issue is right now, your control is easy. You can keep working and it's really hard to stop working and then go back to work. And you don't want to do that, which I recognize. And that's why what we pride ourselves on is telling someone when they can retire and truly not have to worry about going back to work. But this concept of being kind of more content when you're angry or being, I don't love anger as an example here, but like I'll use my story. So when I graduated school, I was lucky. I got a scholarship because I played soccer. But when I left, look, my parents paid for so many different lessons on soccer and I had a private tutor and all these things because my mom just wanted the best for me. I felt a lot of guilt. So leaving college, I said, I'm going to get a job that I really resonate with. That is just, it speaks to me. Went to a liberal arts school and I had some different concerns regarding that. But regardless, I went there, I loved it. And I was like, I'm going to get a job that I love. And I didn't. And I chose to get a job that I did not love. And you're like, well, that's pretty hypocritical. It is. I picked a job that paid me more money because I had guilt growing up and I did not want to have to ask my parents for rent money. I wanted to be on my own. They didn't force me. They were willing to help out. Now I knew their retirement a little bit. And I was like, look, you guys should not be helping me out. Like you should be maxing out your 401k instead. But I was like, look, I know the right thing to do, which is to go. There was a small company that at the time I could have worked for doing some basic sales role. And I resonated with it was like an eco-friendly company. And I was like, look, I think I'd make a comparable salary. And to be honest, I actually thought looking back, I was like, maybe I would have loved it more. So I took a job that paid a little bit more, but it was in an industry that I went, look, there's potential upside to grow. I want to learn, but more than anything, I was like, look, it's going to pay me a little bit more. So I think I'll have a little bit less financial guilt. And that's how I made my decision. Now I try not to make decisions like that anymore, but that's me admitting, even though it was not the smart thing to do, I still did that. So some of you, let's assume Lucas, I'm going to pretend you're my client. Lucas, I know you want to retire. I know you told me you want to spend more time with your family. I know we don't know how long we're going to have our health and energy. Financially, you are good to go, meaning you're working today because you love it. Now, do you love it?
Yes, of course.
Of course.
Every day I wake up and I'm excited to go to work.
Amazing. You love it. Well, this is really easy. You're excited to go to work, but you also told me that your family is really important to you. Are they important to you?
Yeah, they're really important to me, but everyone seems to be in good health, so I'm in no rush to make any changes.
Love it. Then just screw them, they'll be fine. No, I would say, Lucas, I know you told me a while ago that you love your work, but politics are changing. And because of that, you don't know how long, but I want you to know at any point, if you do want to walk away from work, you will be okay. Guys, that example right there, I did this with a client 2 weeks ago. They thought I was going to kind of be mad at them because they're like, they told me that they want to spend time with their family. And I said, you're working because you love it. And they're like, look, I don't love it. I just don't know really what else I would do if I don't want to spend all my time with them. I said, great. Then here's what you should do. You should not retire. And they said, well, that's kind of a relief because like, I thought you were going to tell me I kind of had to, or else like wasn't doing the right thing. I said, there's really no right thing. And I get the sense they don't know exactly what you're going to want to do. So what I'd recommend is keep working until your boss sucks, politics change, or for whatever reason you choose you want to walk away and you step away that next day. And now they're sending me notes like, hey, Ari, I asked for Fridays off. Okay, great. That's the first step of that. So for any of you out there wondering, how do I look into this? Here's how to consider it. So guys, I hope today was helpful. Michael says, I'll have millions after Lucas and I put all my money in Bitcoin. Laura, Lucas, great analogy. I'm on the 10-yard line and need to strategize to get to the goal line. Geopolitical concerns just add to the anxiety. There will always be something, always be something. Rich says, Lucas has 25 million. Rich, there's lots of clients, some character clients we have here at Root. Need to live where I don't have neighbors. So you see how you guys are communicating right now with the @ symbol? That's great. But I hope to have a community where you guys can communicate in a easier fashion. And if you guys want to build a friendship through this, like guys, that's what I'm all for. It's maybe you guys just need to have a conversation with one another and you're like, I'm not alone. Hearing Ari and Lucas, who look like they're 10 years old, yeah, it helps a little bit, but maybe they bring on the advisors and they look like they're 40. It's a little more comforting. Beyond that, I still need some more reassurance. So guys, I hope today was helpful. Not your traditional using the software, not me going through a tax strategy, which selfishly, that is exactly what I love doing. I need to take a step back and I need to read more of these books because what I love, what you just heard about Jeff was humble. He was big deal, guys, at Schwab doing high level portfolio management going, doesn't matter how good I am at this. If I can't communicate to a client, it's like a doctor who's able to perform the best surgery possible, but he can't have anyone get on that table because they don't feel confident enough to get on that table with him. So Rich says, and this is powerful, I've yet to be bored. In fact, I feel like I have less time now than when I was working. Guys, that's going to be some of you as well. And LSU goes, look, Rich, I hear that from the few retired friends I know. It's real, guys. So I want to create a better community. I want to be able to do cool stuff like this. That's it for today's show, guys. Hope that this was helpful. Lucas, anything you want to leave everyone with?
Yeah, we talked about financial guilty pleasures as far as, behavioral finance for those of us still accumulating. Ari, hot yoga. I bought a new car and I like to go out to eat way too much. Any more recent financial guilty pleasures you've had with the holidays coming up?
Good question. Now, as you guys pull this up, I'll tell you about next week. So guys, any other good financial guilty pleasures? This is fun because today was a really in-depth. Some of you guys, like, I don't know, you guys, if you're like me right now, but like my shoulders, I just realized we're up. Like hearing Jeff talk, I'm like, yep, biases. I'm thinking of mine. Oh gosh. Like, it's kind of like I'm being like, why are you talking directly to me? Even though he's not, it feels like they are. So you can see Drika's here. Does anyone feel like quitting your job and retiring when you're in your prime earning years is crazy, even if the numbers look to do it? There's a word for that. It's called the golden handcuffs. Oh, why would I retire? Do you know what I would have done 20 years ago to make $500,000 a year, $300,000 a year? I'm not just going to walk away from that. Well, it's the equivalent of saying, assume you do have your assets today. It's crazy, but what's crazier is not having time with your family and friends. And I bet you'd want that back. Now, the reality is many of you guys can do both. I'm doing both. Lucas is doing both. Now we're working a lot right now. We love what we do, but look, I feel like I'm not sacrificing family and I get my job. So some of you guys just don't have to choose. Others of you don't like what you're doing. So Tim is giving you some advice. If you think your 40s are your prime earning years, wait till you get to your 50s. So you're not crazy as long as you're financially set and confident you can do it. I am burnt out and looking towards the rule of 55 to save me because LSU Tiger probably doesn't have a big superhero account. So With that being said, guys, any financial guilty pleasures, let us know in the chat. Any other financial guilty pleasures? That could be, I mean, I go to hot yoga. Oh, I do. I have a lot of financial guilty pleasures. Oh, this is a bad one. This is my seventh. I know. This is my seventh AirPods. I've lost a lot of AirPods. So that's one of my guilty pleasures. When I lose it, there is a tracking system so I can find it. I found that out later. So I have a bunch of one. LSU Tiger, guys. Super what? Guys, you got to go help out LSU Tiger. Guys, not Lucas. Lucas, you're not allowed because you know. Guys, someone else, it sometimes is going to hit different. Can you please, any of you, go explain to LSU Tiger what is a superhero account? Because it's not a real account, once again, for those who know. So please, it was one of my third or fourth recent episodes, I want to say. So you can check that out, LSU Tiger. But any other financial guilty pleasures? I know it's been a long chat. Dang kids always losing things. So AirPods, I found out you can look them up and I can find them. But that's one of my other pleasures. I'm trying to think. Oh, the other thing is this is a weird one, but I like the hot bar at grocery stores. Some of you are like, what are you nuts? But look, it's underrated. It's easy. I do my groceries and I eat. And what I do is I go to the hot bar at Whole Foods. I eat there and then I go grocery shop. I'm saving money, guys. Okay. That's the ultimate hack. How many of you shop hungry? That is like being on cocaine. Okay. So I've never been on cocaine. I don't really know, but that is, I cannot imagine. I imagine it's that close. So LSU Tiger, they're helping you out in there. Jeff says, we just bought ridiculously expensive luggage so we could travel. Good for you. Lucas, do you have any other weird guilty pleasures?
Yeah, this will be great for this crowd. There's a subreddit called Buy It for Life, where you can buy those types of things that you just buy once and then they last forever. So whether that's like something that's leather, something that's handmade, and those super expensive things that sound crazy to buy. So go check out the subreddit Buy It for Life. For me personally, I have blue eyes, and so I can't go outside without sunglasses on or drive. And when I got my new car, I left my Ray-Bans in my truck when I traded it in, and I went back and they were gone. So some maintenance guy has a free pair of Ray-Bans, and I thought I could go for 2 days without spending, $180. I was like, I'll wait till they're on sale. I'll find a deal, whatever. I couldn't do it. I paid full price plus tax for a pair of Ray-Bans just to protect my blue eyes. So that was I felt guilty about that one for a while. So
that feels like a health one. I mean, yes, guilty. My eyes are blue. By the way, I'm saying I can't go outside or else it just like hurts to open up. Do you also sneeze when it's bright out?
Sometimes. I recently got an allergy test and found out I'm super allergic to dust. So every morning, I'm sneezing. It's like flip a coin, like every other day. But yeah, when it's bright outside, sometimes I'd say 20% of the time.
20%. If I go outside and it's bright and I haven't been outside, and sometimes I'll do that, I'll wake up and I'm going to go work out. And then it's 5 o'clock. I go outside and it's bright. I'll just sneeze. I don't know what it is. Kyle, he's got the best one. Just fresh berries. I'm simple. That's my guilty pleasure, which by the way, is the most underrated dessert. So here's the last request. Guys, I'm going to London in 2 weeks. I'm going to go to an Arsenal game. I'm going to a few other different things, but I'm going to go to London. We have a list of things we want to do. If any of you guys have like, this is the restaurant or this is the activity, I'll stay on for just a few minutes and we'll just talk casual so I can see your responses. If you guys are like, I have no recommendations for you, you are more than free to leave. Next week, we are going to have another advisor who is specifically works with business owners. So should be an interesting conversation. Tim, you guys live in Cali and Florida where it's sunny all the time. Like, why would we vacation? Craig, sold my boat. LOL. Pay raise. Is that a guilty pleasure or is that more so like just letting us know? Good to know. So let me see here.
I think it's boat selling season because we just had a client sell 2 boats and a golf cart. So it's boat selling season, guys. If you're in the used boat market, go get one.
There you go. Get some shepherd's pie. Okay. I can certainly do that. I want to try, I can't believe I was blanking for a second. Then I'm like, what? I know what the fish and chips, but like the proper vinegar ones, I guess they're different. Lucas, have you ever been to London?
No, I have not. I do follow a couple of restaurants. There's a restaurant called Fallow London, FALLOW.
Oh, when you say follow, do you mean like, cause like I'm a menu guy or like for fun, I just like looking at menus. I don't need to eat there. It's like almost booking a trip and then canceling. I'm like, that was a great trip. I feel like I had a great time. So do you follow in terms of like on Instagram, or is it more like what do you mean?
Both. So I've cooked a couple of their recipes, and I was really into cooking for a really long time. I almost went to culinary school. But that's
Whoa.
another story. And they give the best tips and advice, I would say, that I've ever seen online. You can follow them online. I think they have a YouTube page as well, Instagram, and amazing restaurant. I don't know if they have a Michelin star anymall. They did at one point.
I only do Michelin, so
Yeah.
that's off the table. No, okay. Falllow.
Yep.
Okay, I'll check that out. Guys, none of you gave me good recommendations other than I've got Shepherd's Pie. I can find that. And then Churchill War Room. Fallow is amazing. Jonathan's already been. I follow Fallow too. Oh, Lucas is trendy. Guys, who wants Lucas to cook for us? I'm calling it. Guys, are we willing to push off retirement 5 years and fly out Lucas first class, Root HQ? All of you guys come out and Lucas cooks for us and we have a good time. Who's in for only, by the way, those of you live right now, anyone on the recording, we have the live chat so we can see it. Anyone on the recording is not welcome. Just kidding if you're watching the recording, but highly recommend. So Fallow, and then Dishoom Modern Indian, you guys know Lucas and I are big Indian fans. So don't be playing around, David. If I go, I'm going to take a screenshot. I'm going to put it in. So guys, that's it for this episode. Thanks as always.